This is probably a bigger deal than what we are seeing reflected in the board trade today.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Thank you again for joining us today. Well, today on Friday, we got USDA's set of crop reports, and they did seem to really stir up some market action. Here to talk about it, we have Eric Relph. He's with Comstock Investments. And Eric, we did have a knee-jerk reaction when the numbers came out at 11 o'clock Central Time, didn't we?
Yeah, definitely. So it was a little surprising to see the upward momentum that we saw right off the bat. This January report usually is associated with higher volatility. We definitely saw that. Luckily for us, being primarily in ag production, that this was to the top side this time around. And if you look back through the last 15 years, about 2 out of 3 years, you get a positive reaction off of this report. So not a stunner as far as the positive trade, but the degree of which was kind of surprising. There were some of these numbers that really jumped off the page as far as corn yield, bean ending stocks. All of this was very supportive, particularly the row crops. Wheat was kind of a snoozer, but that's kind of to be expected as well.
Let's go ahead and walk through these then. We'll start with that crop production report for the U.S. This is the one that really seemed to catch everybody's attention first. And again, I mean, farmers have been complaining all year that USDA seemed to be overshooting the average yield across the country. And now, wouldn't you know it, right at the 11th hour or right at the end of the game, then they say, all right, we'll drop it after all.
Yeah. This was something that I've been in contention with for quite a while. Not only do I not think we were at a 180 and today we get a 179.3, which I think is reasonable. I think we're closer to a 177 myself. I just don't see where this was a record year given the pockets of issues that we had across the country. We're sitting in one here, so maybe my opinion's a little skewed, but I think there was enough areas that had enough of a problem that the 182 was way out of line, especially 183 that we saw last month. So to see the 179.3 was a big shock to the market because usually you wouldn't see the USDA make that kind of adjustment after adjusting lower last month. So that definitely a welcome surprise. And now are we done, or are we going to see any further adjustment moving forward? Likely we won't see it on paper in this regard, but we may see some demand tweaks to kind of compensate for it moving forward.
Now, their harvested acres, I see, were a little higher than the trade was looking for.
Yeah, and I think that plays into the idea that there were areas that had more trouble than we thought. You know, they planted the corn and typically would make really nice APHs in a lot of areas and just didn't live up to expectation because of one problem or another. In our case, it was floods. And I know that was the case all the way up through central Minnesota. And you're talking about some big production areas. There's a lot of ground here that's going to have a 220, 230 APH and, was sub 200 in a lot of cases. And clients that I have all the way up into the Minneapolis area and over to Fargo, North Dakota, screaming the same thing throughout this entire process. And now we're starting to see some reflection of reality in that regard.
What about that soybean number? I see 50.7 for the yield per acre. Trade was looking for 51.6. That was a big miss too.
We were looking for 1/10 of a bushel and we got an entire bushel, and that's a big deal. And that changed our U.S. carryout big time. Our quarterly stocks number was changed dramatically. This is probably a bigger deal than what we are seeing reflected in the board trade today. I think this is something that could sustain some positive trade for a while. But as we're talking about this, we continue to have the looming factor of Brazil's total production, and we didn't see any adjustments on that front today.
Look at that then. And here we go with the world production numbers, focusing here on South America. I don't see much of any changes. Brazil soybeans, they did drop that a little below what the trade estimate was, but they left it from what they had last month. I guess that's kind of typical for them, isn't it? They didn't change anything from a month ago.
That's right. They're always slow rolling, especially when it comes to Brazilian production changes, because of the information that we get out of there. It's a large country, and I don't want to say it's third world as far as logistics goes, but it's maybe second world. And Matthew and I have had that conversation numerous times. Information doesn't travel quite as fast. We don't have as good a pulse nationwide what's going on down there. And so they are definitely slower to move the needle with regards to their overall production, especially at this time of year. I mean, keeping in mind, this is early July for them. So this isn't the time of year where the USDA, even in the US, if we're in the first week of July, they don't usually get too excited about making changes till we see what's going to happen 3 weeks or a month from now. Didn't move the needle at all on either Argentina or Brazil as far as overall production numbers. And the trade was looking for a little higher number in Brazil. So the fact that they didn't give that to us just added a little fuel to the fire, and I think kept us towards the top end of today's range by the end of the session.
Grain ending stocks. Everything filters down through the spreadsheet. Here is the U.S. grain ending stocks table. Let's take a look at that. Again, more bullish numbers.
Bullish numbers, row crops, neutral, just dead horse in the wheat. So that 380 number in the soybean stocks, I mean, that's directly relative to pulling a bushel off the yield. If you pull a bushel off, you knock down 90 million bushel. Pretty simple math there, and that's what we got from last month to this month. The corn stocks at 154. I mean, there were people predicting we were going to have a 3 billion bushel carry at this point. Just a year ago, we were having conversations with people who thought, that was what we were staring at. It was going to be a 185, 186 yield, and we were going to be close to 3 billion bushel. Obviously, that was not the case, and the USDA has given us some of that. And that's after they reduced a little bit in feed demand, which I completely disagree with, and reduced exports. Now, exports may have all been front run, and by the time we get to the end of the marketing year, I could see maybe there's a warranted case for reducing export numbers. But so far, what we've seen is nothing but higher for the marketing year. So I don't know that I can agree with either of those, but with 30-pound heavier cattle carcass weights, you're talking about some dramatic increases in feed demand, in corn demand for feed.
Well, of course, that's the U.S. grain ending stocks table. Let's take a look at the world, the global view here. Was it as bullish here?
Not as bullish, definitely not. And again, this is without any upward revision for Brazil's production. So if you do make that revision higher for Brazil, now you're getting closer to your numbers from last month from the USDA for soybean stocks. I would expect to see that at some point down the road. But we've also got to keep in mind that today we're supposed to get this short-term 45Z guidance, and that can change everything for us. There's a lot of moving parts right now as we're getting ready to get a new administration in. And right now, I don't know that we can say the USDA is far off with the current numbers that they're printing until we let this weather situation play out in South America. Corn stocks being lower directly relative to the decreased U.S. production, not a big surprise there, but a welcome sight nonetheless.
We're doing events like we're going to be doing with Comstock in, I think it's February coming up. And it's just right now, we've kind of gotten into a rhythm and we like doing what we're doing. And it's been really rewarding. So for right now, we're kind of just rolling with it and having fun.
If we don't drive home the negative consequences of not doing it, and we don't make people aware of those things that they're not doing that can help the culture in their business, they're not going to do it.
Come with an open mind. If you're a person who's hesitant to social media, I definitely understand that some people do not see a value in it. And I do think social media can be a massive waste of time if you're not using it correctly. So if you're skeptical, that is fine with me.
Kind of the stereotypical State Farm corn and soybeans. We just rotate every year. So just shy of 2,000 acres.
It sounds awesome. I know where I'm in Des Moines, Iowa. I enjoy telling stories and telling our story and telling what happened to us business-wise. There was a lot of good and positive things. There's been negative things. There's been a lot of mistakes. A lot of what we learned from is like, oh, we screwed that up. We could have done that better.
Family Farm Masterclass that'll be coming up in February in Des Moines, Iowa. Now, from what I understand, I'm glad you brought that up about 45Z. A lot of folks thought we were going to be getting the rules, but it sounds like we may only get an intention to publish rules, and it would be open for public comment for 60 days or something like that.
Right.
So again, it seems like some folks are disappointed. They're just kind of kicking the can down the road a little further.
I don't know what I expected. I guess personally, I thought maybe we would get something that was a little firmer, but could still be overridden, which is always the case, right? Especially where you have one party controlling House, Senate, and the White House. So, what they end up doing with it is ultimately months away from being known. But if we could at least get some inkling as to what they're thinking at this point, then maybe that gives us some direction one way or the other. Soybean oil absolutely on fire today. And the corn, of course, because of the report, was up really strong as well. So both ethanol and soybean, corn for ethanol and soybean oil for sustainable aviation fuel could be huge winners if we get the right information out. But all this can be changed over the next, after the 20th, right?
Okay. Also, you mentioned that we had a quarterly grain stocks report that came out. Did this move the needle in any direction here on the trade today?
Not in my opinion. I didn't see anything. If anything, it maybe kept the wheat capped a little bit where it could have been chasing the other grains higher, but really kind of kept the wheat in check because we did see a little bit higher number than last year and a little bit higher number or upper end of the trade range of estimates. And so I think that maybe kept a lid on things for the wheat, but row crop wise, kind of a non-event there.
Okay, so let's talk about the rest of the trade. We had other things going on. We had jobs data that came out, had some big moves in the equity markets. The dollar value was at times sharply higher again. A lot of stuff going on. Precious metals market changed. The crude oil market was higher during the day. And then you had jumpiness again in the livestock trade. So let's sort that out. First of all, touch on the livestock, if you would, and tell me what happened there.
Well, following rumors that they were going to be reopening the border with Mexico to allow imports of live cattle from Mexico into the U.S. I say live cattle, I mean live animals. Most of them are feeder cattle, not fed. But that was rumored to be reopening the week of the 20th. USDA comes out and says, no, that's misreporting. That's not factual. There was also rumors floating around that Cargill was going to be shutting down the Fort Morgan, Colorado slaughter plant. That was also turned out to be false. And so the weakness that we saw midweek was immediately offset Thursday and then a little follow through on Friday because we still had front month live and feeder cattle running a deficit to cash and by quite a ways. And then the cash gets more improvement this week than what we ever anticipated. Right now, I'm hearing an average of $5 higher for this week, and we're not done with the week yet. I've got feeders in Kansas and Texas holding out for $7 higher week over week. If we get that realized, we're going to have something like a $6 higher weighted average week over week, and we're going to be talking about 202 live cattle with 322 dressed. So upward momentum definitely warranted. The one-off day was probably due to those rumors that turned out to be false. And I really think that the hogs are just kind of playing along because the cash market was fairly stagnant this week. We only saw packers outbidding up one day. The cutout's been steady, which is an improvement over what we saw the last 3 weeks. So there is a little bit of fundamental strength warranted there, but I think it's more just playing along.
Interesting times in this live cattle trade. We're up here at record high prices. Never seen prices this high in the history of humanity. Mm-hmm. Interesting stuff. And you say maybe 202, but I mean, there's got to be a point, you would think, where we would run out of oxygen in this market here.
Yeah, you would think. I mean, of course, when you see packer margins printed, they don't take into account drop value. So they're not getting any credit for the blood. They're not getting any credit for the hide and offal. None of that's being factored into their profit number. But the packer margins are stagnant at best, and box beef did not keep up with cattle prices this week. When you have live cattle going $7 higher, dress going $7 higher, and box beef choice cuts are only up like 5. It's a nice move for choice cuts, but it's not enough to keep them profitable. So at some point they're going to start suffocating demand, and they have the ability to do that. I mean, box beef is not something that's traded that, we have people out dictating the price like we do the cattle market. It's just a set price from the packers to the wholesalers.
I don't know. I know it's comparing apples to oranges here, but is there any way you can correlate the move that we are seeing in cattle this year to things like the move that we saw in cocoa or even Bitcoin or something like that? I mean, we've had some gigantic moves in some of these markets here. In all cases, talking about record highs. But is this as extreme as what we saw in the cocoa market this year?
Well, it's been more methodical, which lends me to believe it's a stronger market and not just money influx like what we saw in cocoa. Cocoa was very erratic, happened in a very short amount of time. We saw similar action in the orange juice. We've seen similar moves in the coffee. This cattle move has been over a longer period of time in a more methodical, sustained manner, which makes me think that it's more fundamentally driven than just money flow. which is a good thing overall. Now, is it the same from an overall big picture point of view? Yeah, pretty much. I mean, we've doubled values, right? Which is what all those other markets did. Now, cocoa, they doubled it and then went up and added 50% to that. So it's a bit of an anomaly in that regard. But to be twice as high as what would have been considered normal just 5 years ago is pretty remarkable.
I understand you're actually going to be visiting with some cattlemen next week. And I can't wait to hear a report back from you about what kind of insights you're able to gather, for what their intentions are. Are they going to be rebuilding their herds or not in the coming year or two? You think you'll be able to pull much information away from those meetings or not?
I think so, just given the fact of where it's at. So we're going to the Missouri Cattlemen's annual convention this year being held at Lake of the Ozarks. And Missouri is the cow capital of the U.S. I mean, there's more cow-calf operators in the state of Missouri than any other state, and those are the ones that are going to give you that insight. It's not the commercial feeders that are buying 900 pounders and feeding them up to 14 or 1500 pounds that are going to be able to tell you what the herd retention numbers are going to look like. It's going to be these folks, the grassroots cow-calf operators, and that's hopefully who we're going to be talking with and being able to get some of that insight.
Now, you mentioned the hog market a moment ago. Longer term, I mean, while we're up here in the stratosphere in cattle, how close behind can the hogs stay? I mean, can they go opposite directions very long?
Well, I wouldn't think for a sustained move, but man, there's just been zero correlation so far. I think as beef starts to really rocket higher, which we did make record highs in choice and select today in the midday cutout. We'll see what the afternoon numbers look like a little later today, but with record high beef prices, I have to think pork's going to start garnering more attention, especially as we move closer to spring and everybody's starting to price grill cuts. Those chops look pretty appealing right now.
Well, natural gas prices have been going up. Crude oil prices have been going up. I have to wonder if that would lead to higher input costs for farmers heading into next year here.
I would sure hope not with current market values, but that always tends to be the case as you see those markets make those kind of moves.
All right. Well, interesting how we close the week here on Friday. How important is it that we see follow through on Monday when we come back?
I think it's pretty critical, especially in the soybeans. With these numbers, it should give the impetus for a move quite a bit higher than where we're at right now. But we've got to see immediate follow through. So as long as we could be steady to a little higher to start next week, I think we'd be in pretty good shape.
All right. Well, thanks again for all the information. I appreciate that. Be safe in your travels next week. Yep. And in the meantime, have a safe and great weekend as well. Look forward to talking with you next time. Eric Relph with us. He is with Comstock Investments. Yep, that's going to do it for this episode. But boy, we covered a lot of ground. We sure do thank you for joining us. For producer Breanne Jenkins, I'm Marlin Bohling, and we will catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.